Hello everyone. Welcome back to my channel. Today I'd like to share 6 stocks with massive growth potential. The first stock on the list is Zynga. Zynga Inc. provides social game services. It develops, markets and operates social games as live services played on mobile platforms such as Apple's iOS operating system and Google's Android operating system, and social networking sites such as Facebook. The company was founded by Mark Jonathan Pincus on April 19, 2007 and is headquartered in San Francisco, California. Last year, video game developer Zynga saw its revenue hit an all-time high of $1.97 billion, representing a 49% annual increase over 2019. At the same time, its operating cash flow improved by 63% to $429 million. Notable highlights of the year include the launch of Harry Potter, Puzzles and Spells, which received the Google Play 2020 award for Best Casual Game. It also holds a rating of 4.7 on the Google Play and Android platforms. The company also acquired Peak as well as Rolik, which has 3 of the top 50 most downloaded games in the US on the iPhone. An estimated 36 million active users are playing one of Zynga's titles each day. This year, Zynga expects to increase its sales further to $2.6 billion. Despite a remarkable 32% year-over-year revenue growth projection, the stock is only trading for 5 times sales. For investors who are looking for quality tech stocks at the right price, Zynga is your best bet. The second stock on the list is Facebook. Facebook Inc. operates as a social networking company worldwide. The company engages in the development of social media applications for people to connect through mobile devices, personal computers, and other surfaces. It enables users to share opinions, ideas, photos, videos, and other activities online. The firm's products include Facebook, Instagram, Messenger, WhatsApp, and Oculus. Late last month, Facebook lifted the hood on its full-year results for 2020. In one of the most challenging years in decades for the US and global economy, the company generated 21% ad revenue growth and finished with 2.8 billion monthly active users to its namesake website. If you include Facebook's other owned assets, WhatsApp and Instagram, its monthly active user count grew to 3.3 billion. These are insane figures that demonstrate the breadth of the platform's popularity and make it the clear go-to for advertisers looking to reach a broad or highly targeted audience. The $84.2 billion in ad revenue generated in 2020 was almost entirely derived from Facebook and Instagram. Both WhatsApp and Facebook Messenger have yet to be significantly monetized. When the company does open the floodgates on these platforms, Facebook can expect an absolute surge in its operating cash flow. With 4 of the 6 most visited social destinations, Facebook has an absolute stranglehold on the social media space. That makes it a growth powerhouse that investors are going to want to own. The third stock on the list is Moderna. Moderna Inc., a clinical-stage biotechnology company, develops therapeutics and vaccines based on messenger RNA for the treatment of infectious diseases, immuno-oncology, rare diseases, and cardiovascular diseases. Moderna Inc. was founded in 2010 and is headquartered in Cambridge, Massachusetts. Regulatory authorities worldwide are moving at a record pace to clear Moderna MRNA 1273 coronavirus vaccine in hopes of bringing closure to the pandemic. More than 115 million doses of the vaccine have been ordered over the past 30 days, and Moderna expects to produce up to 1 billion doses of mRNA 1273 this year, with that number climbing to 1.2 billion by the end of 2022. Based on advance purchase agreements, the company already has close to $12 billion worth of revenue in the bag for 2021. What's more, the vaccine appeared to retain its protection against the UK and South African mutant strains of SARS-CoV-2. It previously showed 94% efficacy against the original strains of the coronavirus. And developing coronavirus vaccines isn't the company's only focus. Moderna could potentially generate up to $5 billion in annual peak sales if it can get its CMV vaccine to market. In addition, it has a whopping 9 viral vaccines in its pipeline, along with 13 therapeutic candidates. The next stock on the list is Progyny. Progyny Inc. is a fertility benefits management company, which provides fertility and pharmacy benefits solutions to employers, managing IUI, IVF, egg freezing and other fertility treatments. Progyny Inc. was incorporated in 2008 and is headquartered in New York. Infertility is on the rise, partly because young couples are waiting longer to start families and partly because of factors that scientists don't completely understand. Despite a growing need, access to fertility treatment in the U.S. is limited because of high costs and lack of coverage by insurers. This is where Progyny comes in, and its revenues are soaring. In the latest quarter, revenue popped 62% from the previous year and the company swung from a loss of $1.10 per share to a profit of 5 cents. The company has 130 clients representing 2.3 million covered lives, up 55% and 64% from a year ago, respectively. Client retention has been near 100% since 2016. The company in the early days of a huge growth opportunity, with 8,000 self-insured companies and 69 million lives in its target market. Analysts expect Progyny revenue to jump 57% to $528 million in 2021 and shares sell for 8 times that estimate. That's a very reasonable price for a company growing this fast and just becoming profitable. The next stock on the list is Cresco Labs. Cresco Labs Inc. engages in the business of cultivating medical-grade cannabis, manufacturing medical products derived from cannabis cultivation, and distributing such products to medical or adult-use consumers. It focuses on regulatory compliance while working to develop condition-specific strains of cannabis and non-invasive delivery methods. One realization that pot stocks investors need to come to terms with is that the U.S. marijuana market is many times larger than the Canadian pot industry. Until such time as we see cannabis legalized at the federal level in the U.S., Canadian marijuana stocks will remain a risky venture. That's why focusing on U.S. weed stocks like Cresco Labs can be such a smart move. Cresco Labs brings a two-pronged growth plan to the table. First, like other multi-state operators, it has a burgeoning retail presence. Currently, it has 10 of its 20 operating locations in Illinois, which is a limited license state. With the land of Lincoln limiting the number of retail licenses it'll issue, and hitting $1 billion in sales in its first year following recreational legalization, Cresco has a good shot at securing significant market share. Second, Cresco is a leading distributor of wholesale pot products in California, the largest marijuana market in the world by annual sales. By acquiring Origin House in January 2020, Cresco was able to get its hands on a lucrative cannabis distribution license in the Golden State. This license has given it access to over 575 dispensaries throughout California. Cresco is expected to decisively turn the corner to profitability this year, and looks to be on track to top $1 billion in annual sales in 2022. That makes it one of the more compelling growth stocks to buy right now. The next stock on the list is Invitae. Invitae Corp. engages in the provision of genetic information into mainstream medical practice. It includes comprehensive panels for hereditary conditions in cancer, cardiology, neurology, pediatric, and rare diseases. The company was founded by Randall Scott and Sean George on January 13, 2010 and is headquartered in San Francisco, California. The pandemic caused a dip in Invitae's test volume in the spring of 2020, but the business has been bouncing back in the second half. In the third quarter, revenue grew 22% year-over-year on a 27% increase in billable sample volume. The company recently released preliminary results for the fourth quarter, saying that revenues jumped 49% from the period a year earlier. Looking ahead, Invitae says it expects 50% to 60% annual revenue growth over the next few years and analysts expect sales growth of 76% in 2021. Shares aren't cheap at 20 times revenue estimates for 2021 and with the company nowhere near profitability yet. But with this sort of growth and opportunity, I think risk-tolerant who are willing to hold the stock for the long term will be rewarded. Thanks for watching. If you liked this video, hit the subscribe button to receive more like it in the future.